Students, today we are going to start with the question number 12. Here are the two partners Dhara and Meera sharing profit and loss in the proportion 3:2. And in this question they have given the trading account and P&L account combinedly, and backside they have given a balance sheet. And you have to make a revised profit and loss account. Student, from this trading and P&L and balance sheet you have to make revised trading and account, profit and loss account, profit and loss appropriation and balance sheet, including this adjustment now. So you have to include this adjustment. The first adjustment here is 5%. Here it is given 5% interest on capital is not calculated. So you have to calculate. So 5% of fixed capital 1,60,000 capital of Dhara and 1,20,000 capital of Meera. So 1,60,000 5% is 8,000 and 1,20,000 5% is 6,000. Both the partners, you are going to give the effect now. Debit side profit and loss appropriation, and credit side partners capital account. So this is your first adjustment. Now the second adjustment is 10% depreciation on building. So depreciation building value is given here 2,40,000 and 10% of 2,40,000 is 24,000. You have to deduct from the building, which is written on the asset side and which is a credit effect. And the second effect you have to give P&L account debit side. Next is an prepaid salary. So you are going to add in salary. You are going to deduct in salary because it is a prepaid. You have to deduct. So that is a credit effect. And salary account is in the P&L account, profit and loss account. And second effect, debit, asset side, prepaid salary you are going to write. Next is an interest on investment is not received rupees 800. Means it is an outstanding interest on investment, which is your income. So credit side of profit and loss you are going to write, and second is an debit side effect, that is asset side you are going to give. Next is an BDR. BDR is rupees 1,200 is to be maintained. So you are going to write debit side plus in the profit and loss. Bad debt is already given in the trial balance. In that you have to add the BDR. And the second effect you have to deduct from the debtors, which is on the asset side. Last is an credit purchase of rupees 1,600 is not recorded. So it is an unrecorded purchase. So you are going to add in purchase, which is in the trading account, and second you are going to add in the creditors, which is in the liabilities. Clear, students? So this is your 6th adjustment completed. Now we are going to start with the question. Here first they have given, just keep the textbook with you, students. Now first item here it is given a cost of goods sold. Now we are going to start with the sum. First is a cost of goods sold given in the question. So where you are going to write cost of goods sold, you are going to write trading account. You are going to write in the trading account to cost of goods sold. Clear? In the inner column you are going to write 4,64,000. Clear? Next, unrecorded first adjustment was there, student. Here the adjustment number it is already given, that credit purchase, 6th adjustment, credit purchase of rupees 1,600 is not recorded. So it is an unrecorded purchase. So you are going to add unrecorded purchase 1,600, and you are going to write outer column 4,65,000. Clear? Now the next item given in the question is, see on the credit side, if you will see the sales is given. So write here sales, by sales 7,84,000. No other related item is there, students. So second effect you have to give for the unrecorded credit purchase. So first you write here creditors in the balance sheet. You write creditors. Creditors is given in the balance sheet. That is 32,000. In that you add unrecorded purchase, that is 1,600, and outer column you are going to write 33,600. So two effect we have given for the adjustment entry number 6. Clear? Now we are going to see the next is an office expense. So office expense, where you are going to write P&L account. You are going to show here to office expense, outer column 80,000. No adjustment is there for that. To showroom rent. So showroom rent also you are going to write here in the P&L account to showroom rent 10,000. Next is an packing expense. That also you're going to write here. Packing expense, showroom expense, packing expense, 12,000. The P&L account you're going to write. Then afterward it is a bad debt. So I told you bad debt adjustment entry is also there. Bad debt for trial balance is 8,000. And BDR of adjustment is given in the question. BDR of adjustment, that is given in the question, 1200. That is an adjustment entry number 5th. So 5th adjustment entry it is. So one effect you have given here and one effect you are going to give in the balance sheet. Debtors you are going to write. Debtors, which is given in the balance sheet, 56,000. You are going to deduct BDR of adjustment 1200, and outer column you are going to write 54,800. Clear, students? Now we are going to see the next thing here. Packing expense, bad debt. Now advertisements. You are going to write here to advertisement expense 14,000. To selling and distributive expense, everything is going to be written the P&L account. Selling and distributive expense 20,000. Financial expense, also you're going to write here. To sundry expense also you're going to write here. Sundry expense 16. Salary, to salary. So salary adjustment is also there. That is an prepaid salary adjustment entry is there. That is an adjustment entry number 3, third one. So prepaid, you are going to deduct prepaid 400, and outer column you are going to write 7,600. And as I told you, the second effect you are going to give on the asset side, prepaid salary, which is your asset. Clear? Now the next, taxes. So to taxes you are going to write tax and insurance 2,000. So we have completed all the items here. We are going to shift toward the credit side of the trading and profit and loss. By sundry income. So you are going to write here by sundry income 7,000. And it is a bad debt return, that is 1,000 they have given. So you are going to directly write here BDR, or you can deduct from here also. You can deduct from here 1,000, or you can write this side also. Clear, students? You can deduct from trial balance, adjustment and internal, and then you are going to deduct and write in the outer column. That will also do. Now let us see the balance sheet now. Shift towards the balance sheet, your question. So turn the page and see the balance sheet now. So in the balance sheet, what is given? First of all, they have given the partner's capital. So per capital you are going to write here balance. So balance will be on 1/4 by balance brought down, and that is in 1,60,000, and the second partner is 1,20,000. Afterwards on 31st/3 it was an interest on capital by interest on capital. So that adjustment entry is there for the interest on capital, 5% interest. We have already calculated 5% of 1,60,000 is 8,000 and 6,000. Now you have to give second effect of this two. So you are going to write in the P&L appropriation to interest on capital, both the partners, Dhara and Meera. So here it is an 8,000 and here it is an 6,000. You are going to add and you are going to write outer column. Clear? Now the next is, let us see what is there in the balance sheet now. Drawing is given. See, net profit you are not going to write, because when you were going to find from the P&L appropriation, that net profit you are going to write in the partner's capital, and directly you are going to transfer the balance. So now the next is in drawing. So you have to write now drawing. So you are going to write this side to drawing. 48,000 and 24. Clear? 48,000 and 24,000. Now no interest on drawing is given, so you're not going to write it. Let us see any other thing. Creditors we have already passed. Next is in bills payable. So bills payable we are going to write here. Now come towards the asset sides. First is in building. So building. So depreciation is already given for the building. You are going to deduct depreciation 24,000. Clear? Now the next is plant and machinery. So plant and machinery is 20,000. Afterwards furniture, that is also 20,000. Afterward investment is 24,000. Afterwards you are going to see the current asset is given, that is a cash balance. Now the cash balance is 10,000. Bank balance is 25,000. Next is in bills receivable, that is 5,000. Student, it is very easy, straightforward sum is there. So you have written all this. So now let us see, every adjustment entry has been covered. See, depreciation entry is left. One entry you are going to write here, to depreciation of building, that is 24,000 adjustment entry. So you have given depreciation entry, salary entry, you have given both the sides. Yes. Then investment interest, outstanding interest on investment is left. So you are going to write here outstanding interest on investment, that is 800. And the second effect you are going to give in the P&L account. Clear? That is here, it is your income by interest on investment, 800. Clear? So we have given. Now bad debt entry we have passed, credit purchase we have passed. So we have passed most probably all the entries. Now we are going to close the account. First you are going to close this trading account, students. So you are going to total it. So, and you are going to deduct, you will get here GP, gross profit, which is 3,18,400. Clear? Now you have closed the trading account. Now this is been passed here as by GP, gross profit, 3,18,400. Clear? Afterwards you are going to close this. So that is, the total is here, and you will get here to net profit. Clear? After that you are going to transfer this in the P&L appropriation by P&L, that is a net profit. Clear? 1,26,400. Afterwards you are going to distribute this balance in the profit sharing ratio capital account divisible profit. It is Dhara and Meera, 44,960 you are going to write here. So you are going to close. Now you are going to transfer this in the partners capital account. Clear? So you are going to write here 31st 3 by P&L appropriation. Afterward you are going to close this account. Now you are going to find the balance here, to balance carried down. Here you are going to write the balance. Clear? Now you are going to transfer your balance capital account of Dhara and Meera. Now you're going to close this balance sheet also, student, and you will get tally the balance sheet. You can solve it now in your notebook. Clear, student? And your homework is to solve the third this illustration number okay, we are going to give, I will write the homework here in the clipping, you just see it, the homework. You can do the third and fourth one as the homework, illustration number 3 and illustration number 4. Okay, thank you.